the market's getting crushed. You're right. The S&P is falling now, down 1.3%. This is a trend line I'm paying close attention to. This goes actually back to October of 2023. And the reason it's called a trend line for those of you out there is because it's a trend, right? So it's telling you that this has been an uptrend in the market.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway explains how Bitcoin could return to the $90,000, $91,000 range, exploring key market dynamics and investor insights. Join us now to dive into his analysis and discover future trends.
Trump signaled a top, Melania pushed the envelope, and Libra was the final nail in the coffin. So what's interesting is, I think Solana's probably a good buy soon, right? It's becoming irrationally oversold once again. It's getting annihilated. But I wouldn't be surprised if that was sort of it for Solana being the token of this cycle. Like if we get another alt season kicking in, I think I would rather own Ethereum from here than Solana on the way up if I had to choose one of the larger L1 altcoins, because I think enough luster is off the meme coin casino, which was driving a lot of that Solana upside. So now it would have to be more fundamental institutional adoption. I mean, we will likely see a Solana ETF, but that didn't help Ethereum, right? So maybe less meme coin casino and more fundamentals to get Solana back to that high. But 290, 297, looking pretty far away for Solana if meme coins don't come back in size.
So what's the problem with more and more ETFs, I think, is more and more competition for digital gold. That's the problem in space.
Yeah, it's the same amount of it's not new money.
Bitcoin has made a stunning comeback this week, shattering expectations by triggering the biggest CME futures gap ever at $85,000. This remarkable recovery saw Bitcoin surge to around $93,200 after a $10,000 daily green candle, a sharp reversal from its previous slump. The sudden boost was fueled by U.S. President Donald Trump's recent comments, hinting at a strategic crypto reserve, which re-energized the market and revived optimism among investors. Trump's mention of a reserve, expected to include Bitcoin and other major tokens, has provided a political endorsement that many believe could mark a turning point for digital assets. As Bitcoin surged, traders are closely watching key support levels in the $90,000, $91,000 range, a region that has acted as a safety net over recent months. This area is seen as critical. A solid close here could signal a continued bullish trend, while a breakdown might trigger further volatility. Market indicators, including improved on-chain profitability, suggest that the market is recovering, but caution remains due to potential retests of lower levels. At the same time, major U.S. employment data and an upcoming speech by Fed Chair Jerome Powell during the Crypto Summit are adding layers of uncertainty and excitement. With all eyes on Trump's next move and further economic developments, Bitcoin's trajectory this week could set the stage for a new chapter in its volatile history. Traders and investors are watching every move, eager to see if this surge sparks sustained growth or is merely a temporary rally in the crypto market.
What you showed earlier, and see island top versus island bottom factor. It looks like Bitcoin's putting an island top. And that 100,000 threshold, I think, could mark similar to me, this whole market is just like the stock market was almost exactly 25 years ago today. And at the same time, you've seen an island bottom in total holdings of gold ETFs. Remember that the history of what's happened here is just phenomenal. That, it was the greatest ETF launch ever in history. That might have put in the peak. Remember, insiders made money, and when it gets to the mainstream, you want to watch out. And the gold's starting to flip back up. The key thing I also want to point out is the gold, Bitcoin to gold ratio, another island top. I mean, these things are not good. And it's just kind of the indications you get sometimes when you're selling. You should be, when it's selling, should be selling when they're yelling. We got a lot of that. Now we're just going back to normalization. I think, Scott, when you pointed out as a key, yeah, okay, so the short-term stuff is probably getting way oversold. Great for buying opportunities and stuff. But the key thing I also want to point out here is what's happening with S&P 500 versus gold. It's breaking below that key support that's around two ounces of gold per one S&P 500, and it's just these things are all linked. And so I'm making the call of a lifetime that this stuff is going to continue. And I want to point out one key thing that's happening is you look at the other way around. Gold divided by S&P 500 might be breaking above this key resistance. And I'll end with what I still think, McGlone, you've been wrong for 2 years. Admitted. The next big trade, I think, is going to be is going to be U.S. Treasury long bonds. Just TLT now is up about 5% on the year. S&P 500 is down. That's nothing compared to what I've been hoping for, expecting way early. Yes, I get it. And I used to do it. Now I just say it. So complete respect for you and those who do it. But this, I want to show you here. This is a chart of the Bloomberg total 20-plus year bond index. It's like the TLT total return. It's the lowest versus the S&P 500 ever. Now, our database is only going back over 30 years. It's like, just a little reversion. That's a big trade. And that's a key thing we spoke about before we hopped on, but it's a key thing to remember about this year. This year, I think it's going to be an awesome trading year. Buy and hold, forget it. Just look to trade and make some money being speculative, and don't get married to positions. I think that's the way to look at it for now.
Really quickly, Mike, I'm actually looking right now at the Bitcoin to gold ratio. Do you recall when you and Dave made the Macro Monday bet of whether gold or Bitcoin would outperform for the year? Because I think it might have been last March, and I think you might actually have won or be winning.
I prefer to lose those bets, actually, because your show's great, just like your show's good, Gareth. I love being on part of the banter, and a couple $100 I don't care about among friends. That's just fun, but that's okay. I appreciate you remembering, because one thing about getting a few right is I get a lot wrong, and that one just, that one I was thrown down on the mat for quite a while, and it's usually how it works, McGlone, and sometimes you're early. But when it's the delayed reaction gives you the biggest positions ever, and that's when I point out things like I showed here. I think, we're going to have epic. I mean, I'm making the call of a lifetime. And then just based on normal reversion, that is, we're just so expensive in the stock market and so cheap in bonds. And Bitcoin, to me, looks like the whole crypto space, 12 million of them on coinmarketcap.com. It looks like, internet stocks did the internet bubble did 25 years ago.
Robert Kiyosaki, famed for his best-selling book, Rich Dad, Poor Dad, has recently sparked heated discussions with his views on Bitcoin, gold, and silver. Addressing his millions of followers on X, he challenged the long-standing debates about these safe haven assets by asking a simple question. Why do people spend so much time arguing over differences when the only real measure of wealth is how many ounces of gold, silver, or how many Bitcoins you hold? According to Kiyosaki, the focus should be on actual ownership rather than endless discussions. He did not hold back, emphasizing that he cannot place gold above Bitcoin when it comes to protecting one's portfolio, citing Albert Einstein's famous words, "Two things are infinite, the universe and human stupidity." He expressed his frustration with the futile arguments that have long divided investors. Many supporters quickly chimed in, asserting that Bitcoin is the future of money, with some declaring it the hardest asset, while others maintained that gold remains the ultimate safe haven. In another bold move, Kiyosaki stirred controversy by suggesting that Bitcoin might be a scam. However, he quickly shifted his criticism toward the Federal Reserve, condemning its practice of printing money out of thin air to bail out banks. He labeled these institutions as banksters and warned against investing in Bitcoin ETF, referring to them as banksters' money. Instead, he urged investors to buy and hold physical gold, silver, and direct Bitcoin to safeguard their savings. His remarks have ignited a vibrant debate on the best strategies for protecting wealth in today's unpredictable financial landscape. His bold statements have sparked a lively conversation among investors. Critics and supporters alike are debating whether Bitcoin truly outshines traditional safe havens like gold and silver. The discussion continues to grow as market sentiment evolves and new perspectives emerge. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.